What about the expectations of the finance industry from the budget this time? Let's welcome on board Keki Mistry, Vice Chairman and CEO at HDFC. Keki, hi, morning. There are major expectations riding on the budget this time, most importantly on the fiscal front. But with the elections fast approaching, there are few who are worried that politics may take over economics. What are the key measures that you're hoping for?
No, I think the fiscal situation will be kept under track. The Minister has gone and met investors in Hong Kong, in Singapore, in London, in Frankfurt, and he's told everyone that the fiscal consolidation is something which is a priority in the minds of the government. So I'm sure he will meet the fiscal target. Fiscal target for this year being 5.3 and for next year the target being 4.8. So to my mind, that is going to be the single biggest driver of the budget.
Morning, Keki. Nikunj Dalme also joining in. Now, Keki, the government has come under fire for running high fiscal and current account deficit for many years now. Do you see government being able to significantly reduce these deficits?
See, there are two ways you can cut the fiscal deficit. Obviously, it's very logical. Either you increase your revenue or you reduce your expenses. Now, to increase your revenue, you either keep taxing the same people who've been paying taxes all these years, levy more taxes on these people, have higher rates, or you widen the tax base. And I would hope that the budget will be aimed or will be directed at widening the tax base. As far as expenses are concerned, I think there would be a fair bit of cutback on some of the expenses, and we'll have to wait and see what kind of expenses have been cut back on. But I'm sure that whatever measures are taken, the fiscal deficit target will be met. You know, one of the things which we could probably look at, though I don't know if that will ever get done, is that we know that there is so much of black money in India, and why can't we channelize that black money, make it official, get it back into the formal system, levy a tax on that black money, put a penalty on that money, but just bring it back into the formal system. Because today, all that black money is slushing around in the system. It's creating inflationary pressures, and you know, all the measures taken by the RBI are partly getting nullified with this huge amount of black money in the system.
Right. Keki, one of the controversial measures that has been mooted of late is taxing the super rich. Do you subscribe to this idea?
I would certainly not subscribe to that. I would not subscribe to that for the pure, simple reason that whilst tax rates in India are much more moderate compared to tax rates in the Western world, the fact of the matter is that in India we do not have a social security system. So you may have paid taxes all your life, but the day you retire, the government is not there to look after you, whereas that's not the case in the West. In the West, you pay more taxes, but when you retire, there is a social security system. You are taken care of. If you look at the UK, for example, I'm told that after retirement, you are paid something like £1,000 per month. Now, so you pay taxes all your life, and then later on when you retire, the government takes care of you. The system takes care of you. In India, we don't have that. And therefore, necessarily, you need to save a lot more to take care of your old age. And therefore, having higher taxes is really, in my view, not a solution. We need to widen the tax base. Why in a country as big as ours are we having such limited high-income tax earners?
Keki, what measures do you see as critical for the banking and the financial services sector? And do you expect any SOPs aimed at the housing or the real estate sector?
See, first of all, I'm not speaking now as HDFC. I'm talking as an individual. You know, world over, we have seen that the housing sector contributes in a significant manner to the revival of an economy. When there is an economic downturn, you provide a boost to the housing sector, and the whole economy starts sort of getting back on its feet. So, therefore, some measure to assist the housing sector is something which will always be welcome. There are statistics to suggest that there are 276 industries in India, big and small, which depend on the housing sector, on the construction sector. So by encouraging the housing sector effectively, you're encouraging all these 276 industries. Now these industries are big ones like cement, steel, paint, and there are also smaller people. There are carpenters, there are plumbers, and so on and so forth. So by encouraging the housing sector, you're generating so much more employment. Housing is the second largest employment generator in the country, and again I believe there are statistics to suggest that for every 1 rupee invested in the real estate sector, 78 paisa gets added back to the GDP. So I would hope that there is some fiscal benefit to the housing sector. However, one must also keep in mind that there is a need to sort of curb the fiscal deficit, and therefore the finance minister may not be able to do as much as he would like to do.
Let's move from financials to education. Now, education as a sector is another key sector that will find some mention in the budget. What do you expect to hear, about education or education outflow from this year's budget?
I think there are already a lot of measures which are being taken to promote education. I'm not too sure if there are too many fiscal measures that can be suggested to to sort of help the education sector. It's more on the policy front. But I think on the fiscal side, what we need to really address is how do we mobilize household savings. If you see the last 1 year, bank deposits have been growing at a slow pace. Money is not growing, coming into mutual funds. Most mutual funds are actually losing money. Insurance companies are not really growing. So where is all the money going? So the money is going into gold and possibly into other hard assets, and therefore measures are required to boost savings in the financial sector. So I hope there is some measure that the government takes to boost investment in the financial sector.
Right, so Keki, as you mentioned, deposit growth has suffered a lot this year, and banks have asked the finance minister to consider a preferential tax treatment for bank deposits. Do you think something on these lines would work out?
Given the fact that there is a fiscal deficit issue and we need to do fiscal consolidation, there is that much that the finance minister can do. Now, whether it is in the form of encouraging savings in the form of bank deposits, whether it is in the form of savings to people to invest in mutual funds or in insurance companies, some measures are required. But whether it can be all segregated and separate limits be set aside for each of these, whether a couple of these things can just be sort of merged together and you have one consolidated limit for investment in, let's say, mutual funds and insurance companies and another one for bank deposits, all this is a matter of... There is today a benefit. There is a benefit under Section 80C, which says that investment up to 100,000 rupees qualifies for a deduction. But that investment of 100,000 rupees comes through a whole variety of different sources.
All right, Mr. Mistry, really appreciate your time and thank you for joining us.